All right, welcome to the stream. Today is Monday, 9th of March, and I just realized that it is daylight saving time for you guys in the US. So I should have been online about an hour earlier. Okay, so I'm basically going to cover a couple of things in the stream today. We are going to talk about some portfolio movements. We made some buys earlier on when the market was open. And then thereafter, we are going to talk a little bit about BMNR's purchase of Ethereum today, as well as take a look at the valuation of Grab, because we'll be going through some of the companies in our shortlist to determine basically which companies do we want to continue adding into the list. But I thought I would start off with Grab because Grab was already in the list. You can see right now that the total amount of shares of Grab that I have is around 1,500 shares. So I basically bought around 300 shares of Grab this morning, below $4. And in terms of our SoFi shares, that has also increased. Now we have 700 SoFi shares. Welcome, everybody. Good morning. Good morning. I am late because I also realized that it is daylight savings time in the US. So I should not be going online at 10:30, 10:45 p.m. Singapore time. I should be doing it at 9:45 p.m. Singapore time, and I will be doing that on Wednesday. All right. Right now, if the camera looks a little bit weird, it's also because my camera died on me. So it is a very interesting stream that we have today. Camera died, forgot that it's daylight saving time, and we are a little bit late, but the show must go on. All right, let's take a look at how the markets are before we dive in. During the pre-markets, everything was pretty red, but as we got closer to market open, things started to bounce back. So the SPY is now okay. The SPY is now down just 0.7%. So we sort of got a bounce over here. Yeah, I guess you could. I yeah, I guess you can say we got a bounce over here, but we are kind of still in no man's land because the 200-day moving average is around 655. So I think at the moment the market is making sense of what is happening in the Middle East, and if as long as we get a little bit of clarity around that, I think the market should continue to rebound. But however, I think the main concern right now is the prices of oil as well as stagflation. Blue Hour is one of the buyers of so far. Yes, it is. They are. They are. So Blue Owl is one of the buyers of SoFi's loan platform. So at the end of the day, I think if you follow the news around Blue Owl, they basically halted, or not halted, yeah, they kind of halted redemptions on their private credit fund. Um, so we, based on the loan platform business, the loan platform business is in personal loans, and so it's two different type of loans. So I don't really think there's a big effect. So that's the first thing. Second thing is, and I think the second issue with the if second concern that some people might have around the loan platform business, I think at the end of the day, because we see Blue Owl and one of their funds, the redemptions got halted, so we get a little bit more concerned. But at the end of the day, like I said, firstly, you have to understand personal loans, private credit, uh, two separate asset classes. That's the first thing. Um, I think SoFi is getting dragged down because Blue Owl is their client, but it doesn't actually affect their business, which is why I'm buying more. So that's the first thing. I think the second thing to um, the second thing that I think that I want to bring up about the loan platform business is that even if Blue Owl really has problems, it doesn't affect SoFi because all SoFi does is they do the underwriting, they collect the fee, so it's not like they're going to have any sort of balance sheet risk. Perhaps there's some slowdown in the loan platform business if Blue Owl Capital stops buying from them. But you see, the contract that they have signed is for 2 years or so, so I don't think they can just stop like this. And in 2 years' time, whether or not Blue Owl will still be in a position where they're struggling to meet redemptions really is anybody's guess. If you ask me, I think it's quite unlikely that in 2 years' time they'll still be struggling with this. So right now, I don't think Blue Owl's business is broken. I don't have the numbers with me right now. I was just calculating it the other day, but basically, the caveat over here is that they told investors that they are managing to sell their loans for, I think, 97 cents or 99 cents on the dollar. However, that's not completely true, because if you take a look at the terms of the loans, I think there is a further like 20 million, 20 billion. I can't remember the exact number. Basically, the loan is worth about $1.20, and they are buying it back at 99 cents on the dollar. So they are taking around a 20% haircut. That is the concern. That is the worry about around the Blue Owl fund. I think what Blue Owl is doing with SoFi is purely in personal loans, and in the personal loan space, we are not seeing any cracks at the moment, bar a recession. Private credit is a completely different situation. I think with a lot of concerns around the monetization of AI in the future, especially because Blue Owl is the one that funds Meta's data centers. So I think right now the concern is actually with Meta, that if Blue Owl Capital is not able to help them continue funding this, then perhaps they may have to dip into their own balance sheet to pay off for some of the data centers. SoFi high profit margin is partially due to loan platform business success. Of course, so that is definitely true. But like I said, because the contract locks them in for a period of time, SoFi doesn't have any loss sharing agreements with Blue Owl Capital. So I think the only thing that we might see, if really they are to be affected, is that there might be a slight slowdown in the loan platform business. But if you take a look at the volume and how fast they are growing, the loan platform business, Blue Owl Capital, let me take a look at let's go and take a look at Blue Owl Capital. If I'm not wrong, Blue Owl Capital only contributes around $250 million of loan originations every quarter. And so I don't think if you project that out into the long term, as they grow their loan platform business, it's going to become a smaller and smaller part of the pie. So yes, it might affect, but it's not by much. So, okay, this is actually, let me just use my Excel file to show you before we dive in. This is actually my grab folder, but I just want to use Excel to just show you. So if, for example, if I'm not wrong, the obligation is around $250 million. So $250 million, Grab is getting around a 4.5% fee times the $250 million. So they will lose around $11 million in terms of their originations per quarter. So, in terms of their loan platform business revenue. So it's really not that big a sum if you compare the entire business and how much they are doing, because I believe loan platform business accounted for quite a huge, I can't remember the number off the top of my head. Give me a second. Let's see. SoFi Invest. Yeah, sure. I'll show my earnings spreadsheet. I can't remember whether I took out the loan platform business there. Initially, I had it. No worries. It's not being troublesome. Give me a second. Let me pull up my SoFi one. I believe my SoFi's spreadsheet doesn't show the loan platform business anymore because they stopped disclosing individual clients. Initially, I had it because they were disclosing individual clients. This is the SoFi one. Let's see. Oh, I can't move this down anymore. How much did they do in loan originations? I didn't update this loan originations over here. Give me a minute. SoFi loan originations. Let's go. Let's take a look. So personally, for me, I think, yes, while they're related, the impact to SoFi's business now is relatively small. And in the past, I did this portion of the loan platform business because they were announcing big contracts. But right now, what we are seeing is that there are a lot of smaller contracts that they do not announce, and I think because of that, it gets harder to track and project. It's basic. So I in the end just project it as part of financial services revenue rather than have its own segment by itself. That's why I never update this. But let me just go and take a look at the numbers. So if I take a look at SoFi's loan platform business, let's see. Give me a minute. Net income, where is it? Did they not show it here? Maybe it's in the announcement. Give me a minute. Pulling it up. Blue Owl was 1/3 last time. I don't think they are a third right now. Give me a minute. Let me pull up the numbers for us. Why is everything not working today? Here we go. There we go. Let me see. Press release. All right. So you take a look. You know what? Let me share my other screen. Okay, so you can see. I'm sorry because my camera died. Right now, I'm streaming through my the camera on my MacBook. So sometimes when I adjust the screen, you are only going to see the top half of my face. I'm not too sure, but I think my cable died. All right. So the question right now that we are dealing with is the impact that any potential troubles that Blue Owl may have on SoFi and their entire loan platform business, how much it's actually affecting them. What I'm going to do, I'm going to show you rather than. Okay, you know what? Give me a minute. I'm going to pull up this first. So I'm going to zoom this in, and I just want you to take a look over here. So if you take a look at the press release from their last earnings, it says the total fee-based revenue surged to around $443 million, up more than 50% year over year, generating 1.8 billion on an annualized basis. This is driven by strong performance of the loan platform business, right? Which generated $194 million in adjusted net revenue, up 15% from the third quarter and nearly 3x from the previous year. So the loan platform business is now running at an annualized pace of $15 billion of originations and $774 million of high margin, high return revenue. And so if you consider the Blue Owl Capital deal, I believe the Blue Owl Capital deal with SoFi is around $2 billion for 2 years. Give me a minute. Let me double check. Blue Owl SoFi deal. Oh, sorry, a $5 billion deal. Okay, let's take a look. Okay, so over here, last year they announced a $5 billion loan platform deal. How long is it for? I believe it's for 2 years. Under. Oh, you're also asking Claude. I actually just signed up for Claude because I've been testing out the different bots. So yeah, I think I quite like Claude. What I've seen, so I just signed up for it as well. But I haven't really like trained it to what I want. Let's see. Yep. So they renewed their deal last year in March of 2025 for around $5 billion. So $5 billion across the span of 2 years. That's around $600 million every single. Okay, so $5 billion over 2 years. Yeah, 252.5. So I would say that now if you consider that SoFi is operating their loan platform business at a run rate of $15 billion every single year, and they're likely to continue to increase this number. The Blue Hour Capital makes up around 15% of their overall originations, and it's no longer one third. I think one third was from the early part of their loan platform business, right? So right now, if SoFi is generating $15 billion in loan originations, Blue Hour Capital does $5 billion across 2 years, which means per year they are making up around $2.5 billion out of that $15 billion, which makes it around 15%. And as they grow their loan platform business, the impact that Blue Hour Capital has on the loan platform business gets lesser and lesser. So really, I don't think there's going to be too much impact over here. I'm sure that there is enough demand for SoFi's loan platform business to offset some of these Blue Hour Capital issues. Now, the only thing that I want to point out is that while we say that okay, Blue Hour Capital may have a problem in the private credit space, you have to understand that this is a contract that they sign. They do have the obligation to uphold their end of the contract. It's not so, I don't think it's so easy for them to just get out of the contract over here, which is why, at least for the next 2 years, I don't think it's going to affect them. And by the time 2 years of time have passed, I doubt they will be having the same kind of issues with the private credit. So, okay, you don't have to paste the whole thing into the chat window. So, what did Claude say? Is this correct? This is correct, right? $5 billion. Because the first deal that they signed was $2.5 billion. And then this is the second one that they signed for $5 billion. They don't disclose all of their customers. That's the thing. They only disclose some of the bigger deals out there. So, like Fortress Group is another one that they disclose, but they don't disclose every single customer. I all they tell us is that they have around $100 billion worth of loan originations that they reject every single year. Right now, they have only addressed 15% of that $100 billion, right? Because right now they're running at an annualized run rate of $15 billion. So I believe a lot of these are some of the smaller lenders out there that they work with. Right. So Claude said the same thing. Okay, so that means we are correct, right? Blue Hour Capital makes up $5 billion split across 2 years, $2.5 billion out of $15 billion. Now, this $15 billion, you also need to remember it is based on 2025's numbers. As we go into 2026, they already guided for an 80%, 60 to 80% year-over-year growth in the financial services side. So if they're able to keep up that kind of numbers, I would say that Blue Hour Capital will likely only make up around 10% of their overall loan platform business, which is why even if they do get into any trouble, not too worried about that. Yep. All right. So with this, I want to take us through some of the changes that I have made to the portfolio. So if you take a look at all right, so as we jump into the portfolio, there's a couple of things that we need to take note of. I think the prices of oil is really something that is spooking the markets. But what we are seeing right now is that the markets seem to be taking it in their stride. So every time there is some sort of shock in the markets, of course, markets tend to sell off. But as they make sense of it, as they feel like they have an idea about the timeline and what to expect, markets tend to recover. That is exactly what we are seeing. So right now, it's only about 2 hours into the trading day. We do not know for sure whether or not this recovery will actually hold. So I think that remains to be seen. Now, for this current portfolio, let me see. Where am I? Okay. So you can see that today, I made two purchases. I bought Grab early on when the market opened at around $3.87. Bought 300 shares, basically another $1,000 worth. And then SoFi, I basically bought SoFi at $17.91, 200 shares. I was a little bit tempted to buy 500 shares outright of SoFi. Not too sure whether or not the cash secured puts will get assigned at the end of this week because I have strikes at $17. So if you take a look at the position now, Grab, I have around 1,500 shares, cost basis around $4.23. And then with SoFi, we have 700 shares, cost basis $18.20. And I have 10 cash secured puts sold on them. So currently, we sold them for around 51 cents per contract. We have collected around 53% of the value, which means we have made around $275. Right. So if I were to close the contract today, I would have to pay back another $235. Cannot explain the recent sell-off. I think the recent sell-off really is the entire market. Blue Hour Capital definitely is one of the reasons for that, and I think just the entire market caused SoFi to sell off as well. I mean, if you take a look right now, a lot of the higher growth names basically are being sold off because I believe the market is trying to de-risk, right? The Amazon position, no change over here. Still $195 strike. If we get close to the end of the week and we do not seem to be hitting $195, I'll make a decision then whether or not just to buy the shares outright or to keep selling the cash secured puts. Because once again, for those of you listening, cash secured puts is not completely risk free. What you actually risk losing is opportunity cost. So imagine if I sell Amazon cash secured put at 195, yes, I collect a couple $100, but if the market recovers, if this war turns out to be shorter than what it seems like it's playing out right now, markets recover, Amazon goes back to 220, 230, and then that's a missed opportunity. Similarly with Nvidia, right now, this is because this Nvidia put, we just sold it on Friday last week. I believe it's expiring on the 2nd of April. Yeah, 2nd of April at 170. Remains to be seen whether or not the strike will be hit at that point in time. So basically, this is the position. I doubt I will be buying Nvidia early, but Amazon, once it expires this Friday, I'll make a decision. So probably closer to the end of the week. Now, what I want to do right now before I go into the spreadsheet is, you can see I've been buying Grab on the way down. I want to see whether or not I can. I don't think today is a good day to be selling calls because the stocks are down. But I just want to take a look at the kind of premiums that we'll be getting if we sell a call. Yeah. So you see, this is the problem with Grab, which is why I'm not too keen on holding a big amount of Grab. Because even at 450, 1 month out, you're only getting 4 cents, which is not much. It's about 1%. Yeah. So I don't know. I will, yeah. I think I'll let the market slowly recover, and then I will sell a covered call on Grab. With SoFi right now, again, today is not a good day. I am looking to sell some covered calls on the SoFi position, but I'm slowly, building out this portfolio. Maybe not all at once today or Monday. All right. So right now, summary of the portfolio. We have bought extra Grab and SoFi shares this morning, looking to cover the position using covered calls, especially when the market rebounds, because I do think right now we are kind of in a covered call market over the last couple of weeks. Do I recommend selling puts on BMNR? I cannot recommend anything because I do not know your situation, but I have cash secured puts on BMNR at $16 because I believe worst case scenario, if the market does correct, 12 to 16 possibility. So that's where I have put my cash secured puts. If not, to me, those just lower my cost basis. So COE going up, Grab profits will eventually get squeezed. Oh yeah, tell me about it. I'm not looking forward. Next year I have to change my car, so that's when I will have to worry about that. If you guys do not know, COE is basically a certificate that you have to buy in Singapore in order to own the car. And of course, the certificate itself costs $100,000. And yeah, so that's what he means by this might potentially squeeze Grab profits. So we will see. I believe for taxi, the COE is slightly less. So I mean, although it is less than your personal use vehicle, it is still going to increase along with the rest of the market. So we'll see how that plays out. Right. So earlier on, someone was asking about cash secured puts on BMNR. Like I said, can't recommend anything. I don't know your time horizon, your risk appetite, and things like that. But for me, I have sold at $16 because I have done the valuations before in some of my previous videos and determined that, if the market really corrects another 10-20%, BMNR can fall another 20-30% from here as well. And so at that point in time, I was thinking from $20, if they fall another 40%, it's around $12 to $18. And I believe there's some sort of, I can't believe, yeah, I believe there was a reason why I chose $16. Let me go take a look. BMNR. Yeah, I believe there's this like gap here at $14 or so that might possibly, yeah, some people, I don't know, some people are calling this a gap, but because the price has been so volatile at the start, it's a little bit hard for me to see, but I feel quite confident buying BMNR for my portfolio at around $12 to $16 if the market crashes. So I'm having around always $16,000 to $20,000 just idly there until if BMNR does correct. If not, I will look to allocate that into other things if BMNR does recover, because I've more or less built up my position in BM. Elijah, recently I got interested in INTR. INTR is what? Okay. What do they do? What is INTR? I don't think I have heard of them. Is it correct? INTR? Inter and Co. I've never heard of them. A Brazilian bank. Okay. Okay. I mean I can go take a look. It's gonna be similar to D local, I guess. Right? Exposure to Latin America. All right, something I'll take a look at. Okay, so with that, I want to jump into what BMNR is doing today, and then from there we fill up our spreadsheets, and yeah, and then we'll take a look at BMNR's valuation a little bit. So jumping into BMNR right now. All right, so this is the BMNR spreadsheet that you guys should be familiar with. Let's change the date. Today is the 9th of March. All right. This week, in their announcement, Bitmine actually started to buy a little bit more Ethereum, and they made sure that everybody knew. Now, I think one of the things that I wanted to address is also last Friday I was actually talking about the article written by some research firm. I can't remember, Cowper Research or something like that. They were complaining about this rate falling down. So I think Bitmine did a good job in reaffirming the current staking yield that they are receiving. So in today's disclosure, on the 9th of March 2026, Bitmine Emergence announced ETH holdings of 4.5 million tokens of total crypto and cash holdings of around $10.3 billion. So if you scroll down over here, you can see that today they own around 4,534,556 Ethereum on the balance sheet at around an average price of $1,965. They have 195 Bitcoin on their balance sheet, and their $200 million stake in Beast Industries, and a $14 million stake in 8Co Holdings, and total cash of $1.2 billion. Wow. So okay, so they have massively increased their cash position, and at the same time they have added more Ethereum as well. So let's take this number 4,534,565. Okay, so I'm going to go to my Ethereum accumulation over here. Let me share this tab for you, and then let me zoom this in. So this week it's 4,534. What's the number? 4,534,563. So if you drag this down, you can actually see that right now, this week, they acquired nearly 61,000 Ethereum tokens. This has been increasing steadily in the last couple of weeks. They also let us know in that disclosure that they have bought slightly more than their usual average, because they think that we are getting near the bottom, right? So I believe the price average this week was around 1965. Okay. which means that currently BitMine owns around 3.74% of the total outstanding supply of Ethereum, which means they are less than a third, right? More than two-thirds of their way there. Okay, then the impressive thing is their cash outstanding. So they have $1.2 billion in cash. So $1.2 billion in cash. This means that they added $332 million in cash from the $868 million last week. So if you remember, this white column over here is the total capital raise, right? This total capital raise includes the amount they used to buy Ethereum as well as the cash being added onto the balance sheet. So if you take a look over here, they bought around $61,000, 61,000 Ethereum tokens at around $1,965. You add this to the $332 million of cash they have added onto the balance sheet. They raised a total of around $450 million this week. Now, the average price of BMNR last week, let's take a look. Let me go to Yahoo Finance. Okay, so if you take a look at Yahoo Finance, I think they got historical data over here. You can see the historical prices. And then I'm just going to go weekly. So last week on the 2nd of March, the high of BMNR is around $21.80 and the low is $18.82. 21.87 and 18.82. So if we go back here, share this tab. So it's 21.87 plus 18.82. Take this, divide by 2. So on average, BitMine share price last week was $20.35. Again, I just want to make this very clear. This is just a way for us to get a ballpark figure of their share issuance every single week. This is not a definite number. Okay, so this is just to give you an idea of how much shares they're issuing every single week, because we have seen last week that they were trading above 1 times MNAV. Now, right now, I believe they're not above 1 times MNAV, but last week they are. So they have added around 22.2 million shares to their balance sheet. So if you take this number over here, we just add 22.2 million, which brings us to a total share outstanding of around 506.5 million shares. Oh, which means because of that, they're currently still above 1 times MNAV, okay, which is pretty impressive. This actually shows you that there is demand in the market for BitMine, which is why, although you can see the price of Ethereum actually, being more or less range bound, but the price of, or even dropping somewhat, but you can see the price of BitMine right now goes against at least my portfolio, right? My portfolio is down. SoFi is down, Grab is down. I think I hold a little bit of Synaptics, that is also down. HIMS is down, of course, it recovered today, but BitMine is up 5%. So I think this really shows you that there is demand for BitMine shares. I think currently they are being held back by a lot of the macro, the things that's happening in the macro environment. They're also being held back by the crypto winter. But I think as we see risk on, as we move from the risk off plays to the risk on play, then I do think that BMNR will be one of the biggest benefactors of the potential upsides. So right now, I'm going to change this number. What would we copy? Can I just copy this over here? Yep. All right, 4,534,563,000 Ethereum tokens, cash and equivalents, $1.2 billion. Again, projecting out to 30th of June, margin of safety 50%, so that we are accumulating around 9,000 shares every single day. So if I take, reason why I'm doing that, you can see 9,000 times 7, it's around 63,000, which is right at the pace that which is basically right at the pace that BMNR is buying Ethereum right now. Which means if they continue this pace of accumulation of Ethereum, they would buy another 1 million tokens of Ethereum by June 30th, which brings their total Ethereum balance on their balance sheet to 5.55 million Ethereum on June 30th, I just realized this is supposed to be 2026. All right. Oops. Oh, sorry, here. Correct. I confused myself. Yes, June 30th, 2026. Okay, so right now, the price of Ethereum seems pretty much range bound. Let us take a yeah. The price of Ethereum seems pretty much range bound. Right. So if you take a look over here, let me share my screen with you. Is it possible for me to share this worksheet? Yes, yes. I'll try and make this available once I clean up everything, because this this Google sheet, there's a lot of my own workings at the back. It gets a little bit confusing, and the formulas and all that. So I need to find a way to. I'll go and lock some of the formulas so that it can't be changed, so that it doesn't mess up the whole calculation. Right? Am I going live tomorrow? No, I have a meeting to attend tomorrow at night. I will be live on Monday, but CPI is coming out tomorrow. Okay, so if you take a look at the Ethereum price, we have been pretty much range bound. So let me show you. No, alrighty then. Yep. I'm sorry to disappoint you. I do have a meeting to take tomorrow. Um I think, yeah, like I said, March it will be Mondays, Wednesdays, and Fridays. And then once I'm back from my Vietnam trip, I believe it's on the 3rd of April. So on the 4th of April onwards, we will be live every single day. Right now, it's just for me to test out everything, all the sharing of screens, helping me to get used to this. And like I said, at the same time, also because I have just moved to a new company, which is a lot less, which is a lot more encouraging for us to use social media and stuff like that. Yeah, I will be more actively online. The reason why I wasn't so active online last year also is also because when I was transferring between the two companies, I did not want there to be any sort of compliance issues and things like that. So yeah. Yeah, I'll probably do that, share it as view only. All right. So if you take a look, Ethereum, sorry, Ethereum has been pretty much range bound since early Feb, right? So we have been pretty much range bound. I think once we actually break out of this, we will start to see, at least I feel, a retracement to the 200-day moving average, which is around $3,300. And even at those prices, I think for a lot of people who have been buying, you should be more or less close to your break even, because I believe my own cost average for BMNR is around $38, $39. I can't remember exactly. And then I haven't been diligently accounting for the options, so I will have to do that. But let's say it recovers to the 200-day moving average, which is around $3,300. Right now, they are staking. How much Ethereum have they staked? Let's take a look. Am I in tech? No, I am in finance. I was a primary school teacher. Yeah, and I went into finance. So the funny thing is that in Singapore, um, I mean Singaporeans in the channel over here can vouch for it. In Singaporeans, right? Sorry, in Singaporeans. In Singapore, uh, there are financial advisors. I'm a financial advisor, but financial advisors get a horrible rep in Singapore because most. Oh, sorry, I was just told cannot say these kind of things. Financial advisors get a bad rep in Singapore because I think not as well developed. It's a pretty nascent industry compared to other parts of the world, which is why in the end I decided to move firms. So I am somewhere, and next time I can tell you once everything is completed, where it allows me to be a lot more forward in terms of really giving this kind of, you know, financial, I don't know, insight. Yeah. So the reason why I even went into the finance industry in the first place, because being a primary school teacher, I see a lot of students and the parents, right? They're in very bad situations because there is a severe lack of financial literacy in Singapore. It's horrible. If you think it's bad in America or in whatever part of the world, it's just as bad in Singapore. So, and I think it doesn't help that I think the financial advisory landscape, I believe people in Singapore can attest to this, hasn't been like the most well regulated at times. So because of that, a lot of people have a very bad reputation. A lot of people have a very bad impression. I mean, I was one of those with a horrible reputation, or not reputation, horrible impression of financial advisory, which is why I decided to join in the first place. It's a long story, but yeah. Oh yeah, many aim for the 1M65, but I don't know if you saw his clip recently. I believe he spoke to some of the Kelvin Learns Investing and the group of them, and then they kind of disagreed with him because of the mathematics behind it. Yeah. Yeah, that's a whole completely different take. Does Singapore allow people from other country to move and set up themselves options trader, single person LLC? Um, I think it's not that easy because I think if you set up a business in Singapore, you bring in some cash, they will allow you. Because I have helped set up. I mean, I've overseen some of the family office being set up in the past. Like I've seen how they've done it, but uh, yeah, it's easier to move your family office over here than you just coming in and say that I want to set up an LLC to be an options trader, unless you are bringing in a huge amount of capital. Yeah, yeah, good to hear that perspective. Yeah, so like the funny thing is that I have a very good impression of financial advisors in Australia because I used to live in Australia and my friends from America as well. But financial advisors get a horrible rep in Singapore. Anybody in the chat in Singapore can tell you they get a horrible rep. So okay, this is completely sidetracked since we are talking about this. You will have, I guess, in a sense, sometimes they will end up calling their friends. So depending on which firm you're at, thankfully, my firm, my manager, even my old one was great, right? Nobody forced me to like go and call through my whole contact list to talk to all of your friends that you've never spoken to in 20 years just for coffee. Okay. So I've thankfully never had to do that because my previous manager was fantastic. So I had nothing bad to say about my previous firm. It's just that I think the focus is different. I think you can tell that my style is more, you know, get your insurance done in the easiest possible way, and then let's focus on building wealth through the capital markets. And that is not something that my previous firm was focusing on. So because of that misalignment, ended up having to move to a different firm. But by and large, like I said, in Singapore, reputation horrible, but also because I can understand why my parents themselves also yeah, I think it's because of my parents' own experience in the past with financial advisors, which is why I never uh liked them in the first place. Keep sidetracking, it's interesting. Yeah, so I would say that the financial industry in Singapore is very nascent, but I think I'm meeting more people that gives me the impression that it is slowly trending in the right direction. Impressions are slowly starting to change. That's one of the reasons why I want to force myself to go live every single day. I think people have this impression of financial advisors in Singapore that we do not have any sort of competency in the financial markets, cannot give proper financial advice. All we want to do is chase the next sale. So I think that's also because of the incentive structures of some firms in Singapore. Yeah, and I think over time that will change. I think nothing can be changed overnight. It is where it is today because there is still demand for some of the older products. But I think more and more, especially the younger folks, they are appreciating this newer style of financial advisory. So yeah, like I said, nothing bad to say about my old firm. In fact, my old manager has been a very good friend for a very long time, and yeah, I think he taught me a lot of things about this industry because as I came over from a primary school teacher, completely lost, right? So yeah, and I think right now, because different alignment and in this new firm, I'm able to talk about these kind of things freely without getting into any compliance issues. What did I use to teach in primary school? Okay, I I taught everything. I did English, math, science because I was appointed as okay. My school does it a little bit differently. There's a discipline master in school, usually one, right? But we do it with discipline committee. So there's like three of us, and then we oversee the discipline of the whole school. So I taught everything, and I was discipline master back in school, which if any of my friends are listening, they will all tell you I'm the last person in the world you think would be a discipline master. It's pretty horrible student. Somehow, I think horrible students make good discipline masters because you know what the students are going to be up to. Like before the thought crosses their head, it would have crossed mine. So, oh, I am not, but I can pretend to be. Is BMNR my only stock? No, obviously not. I do hold funds, and then BMNR and SoFi is in my main portfolio, the one that you all saw last year. That has a couple 100,000 inside, and then I have this small one, right? So I manage a portfolio of REITs, and then I have BMNR and SoFi, and then I have this. So it's not but I do subscribe to concentrating your portfolio. Yeah. If you are the kind that likes to manage it actively for me. Yep, it is just the way life works. And I think really it's because of, interacting with the students and the parents that I find that a lot of them are in the situation that they're in because I think the financial literacy level in Singapore can be improved. Yeah. Am I selling covered calls like crazy? I wouldn't say like crazy, but I mean I do it on a fortnightly, otherwise monthly basis. All right. So sorry, before I answer some of the other questions, let me finish this BMNR segment first. If you guys got any questions, you leave them there. I will answer it after I'm finished with this segment. All right, so jumping back into the BMNR valuation, I just want to point out a couple of things right now. Firstly, if you take a look at the staking of BMNR, as of 8th of March, BMNR stakes a total of 3 million Ethereum. This hasn't been changed for the last couple of weeks. Don't really know why, but they seem to be taking up a large portion of the staking queue. So I expect more Ethereum to be staked over time. I don't think they're stopping at 3 million. Right now, this is the important part. Ethereum staking yield rewards is around $259 million annually using a 2.91% 7-day BMNR yield. So which means BMNR is actually generating around a 2.9% BMNR yield. Now, remember last week, we were talking about in that short report, people, the firm itself was saying that, oh, you can actually see the staking yield drop. So they were not lying when they said that. The staking yield indeed did drop. You can see right now the CISA benchmark has fallen to 2.6%. It has fallen to 2.6% because the number of validators increase. And as the number of validators increase, this is a self-balancing mechanism where it kind of like helps to balance out to make sure that no one validator gets too big because it mitigates the rewards. But what is interesting is that BMNR still tells us that they're performing at 2.9%. And that is the thesis of Maven in the first place. Because they have institutional grade staking abilities, they're able to generate a higher staking yield than the average yield. So right now, the spread is around 0.3%. And this is really the 0.3% where the profit lies for BMNR. Because now, if the banks or the funds like BlackRock goes out and stake their own Ethereum, firstly, they have to build out their own staking ecosystem, which is unlikely that companies like BlackRock is going to do. If they do it normally, they're just going to get 2.6%. However, if they do it through BMNR and BMNR is able to get a 2.9% yield on their staking returns, what that means is that this 0.3%, Bitmine can actually keep maybe 0.2% and give them a 2.75% staking yield. So which means, these funds like BlackRock, they are receiving a higher staking yield than if they were to stake their own Ethereum organically in the market. But at the same time, because BMNR is operating at an even higher yield at 2.9%, they are able to make the spread. And that goes, that's basically pure profit for them. So for me, I think this is a undervalued portion of BMNR's business that people are not really taking a look at. right now this spread between where the CISA rate really is as well as the current staking yield of BMNR. So right now BMNR is staking at 2.91%, CISA yield 2.64%. This spread really is where they can generate profits as they help to bridge traditional finance and DeFi. So over here you can see I have a portion in my BitMine valuation eventually for when they extend Maven as a staking as a service out to other financial institutions. We will start to fill this in, but for now, right now, zero, right? But eventually, you can see how this portion of their business can start to build out. So this is one of the four pillars that Tom Lee has been talking about. So if you project out that BitMine at least recovers to the 200-day moving average at around $3,300, 4 million Ethereum staked. This brings a total. This brings BMNR's price to. Okay, sorry, I need to change the MNAV because I'm still assuming a crypto winter kind of bear market. At a 0.9 times MNAV with 50% dilution, you end up with a BMNR share price of $27.75. Base case, 45% dilution, 1.1 times MNAV, $36.57. And a bull case of 1.3 times MNAV, 40% dilution at $45.70, which means the fair value of BitMine, once Ethereum recovers to $3,300, it should be around $36.67. So I think one of the things that you have to bear in mind over here is that right now we are assuming that when Ethereum recovers to $3,300 over here, the MNAV will still stay relatively compressed because it is a crypto winter. Whether or not that is true is really anyone's guess, but I like to be a bit more conservative in my estimates. Of course, for me, I am aware that the MNAV can expand as well. It's basically like the P ratio and EPS, right? Your EPS can expand and then you get a multiple expansion, and that's when you really see those kind of parabolic moves in the stock price. But even if we do not see any multiple expansion for BitMine and we just see the price of Ethereum recover to around the 200-day moving average at around $3,300, then the fair value at that point in time should be around $36.67. I've already made a whole segment of, and his life story is really, really interesting. I think I've covered it in one of my first few videos about Grab. I'll be talking about Grab later on, and you can actually see my valuation and my projections for Grab. Okay, Aditi is asking over here, why are you so convinced on Grab? I don't think I'm convinced on Grab. Actually, if you take a look at my portfolio holdings, Grab makes up only around 5 to 6% of my portfolio. There's a part of me that wants to invest in it because I want to invest in things that I use every single day. I use Grab nearly every single day right now. And I think that it is a way for me to get exposure to the emerging markets because I'm not. I think over the years, I think I've been investing since what 2017, so that's like 9 years. One of the things I've learned is that there's always an opportunity at somewhere in the market, and so rather than me going out to chase some Vietnamese funds and things like that to get exposure to the emerging markets, Grab is a way for me to share in the expansion of the GDP in Southeast Asia as well as the rising middle class in Southeast Asia without taking on too much risk. And I think it helps to balance out a little bit of my portfolio because a lot of my portfolio is very volatile. BMNR, SoFi, I used to hold Palantir for a while, and I think that's where a lot of this volatility can affect my portfolio swings quite a bit. So I think with Grab, it's a bit more of a slow and steady mover. So it's basically more of my whole portfolio construction rather than having super high conviction on it. You can see later on that my projections for Grab is not extremely high. I'm just using their own projections. Even then, doesn't get you to super fantastic returns. I believe if I didn't remember wrongly, the numbers this year tell you that potentially from this point there should be around a 20 to maximum 30% gain for Grab this year. Oh, you're from Vietnam. I am good. You're Vietnamese. Fantastic. Yeah, because I am going to Vietnam on 31st March. And you know what? Like so many people have been asking me to talking about going to Vietnam and things like that. So yeah, I am looking forward. I am looking forward. Yeah, I'm looking forward. I'm a little bit like not sure what to expect because first time being there, but I'm looking forward to try the coffee. Really, that's Grab's operating profit turned green. I mean, this year is their first full year of net income profitability, but I think because of the convertible debt that they have issued, plus some of the stock-based compensation that they have to give to their staff, they are still diluting quite a bit, a little bit more than I expected. I would say because Grab is such a small percentage of my portfolio, and I just buy it because I want exposure to emerging markets more than anything. I don't always pay the closest attention to Grab. I have to say, I just re-looked at some of the numbers this week. I just re-looked at some of the numbers this week. I think that the dilution, at least this last year, is a little bit more than I expected, because I only expected around a 3% dilution. I believe it came in around 4 or 5%. That affected the EPS a little bit. But if you take a look at the projections that the management team is giving us, around 20% growth in terms of revenue and 40 to 44% growth in EBITDA over the next couple of years, then I think the valuations still make sense today at around $3 or so. Oh, you haven't been there? Wait, so you were in the US like since you were born? Do you go back to Vietnam often? Right. So with that is the end of the BMNR segment. I just want to very quickly, because I have a friend that has a condo in Vietnam, so I'm getting places from him to go when I'm there. But yeah, banh mi, pho, and things like that. I've been training my pronunciation by watching some TikTok videos. Apparently, banh mi is not really the correct way to pronounce it. But yeah. Okay, let me fill up my Excel spreadsheet regarding this portfolio to indicate the additions. And then after that, we will talk about why Grab has a place in my portfolio, despite it not being the fastest grower. Okay, let me share. All right. So the Amazon position has no change right now. Okay, I actually have 0 shares. It's just that I hope to buy 100 shares around $203, but right now I have 0 shares. Basically, on the 9th of February, sold a put, expired 28th of Feb, collected $229. This is the realized premiums over here. On the 3rd of March, we sold a put expiring 13th of March. This time around, getting $267. This is the current contract that is still open. If we take a look on the markets right now, I believe this is, I think, only 67 cents. Am I right to say that this is 67 cents? Give me a second. Right now, oh, it's 48 cents. Okay, so current price, this one I have to change it manually. It's 48 cents. 48 cents of extrinsic value. I know a lot of you have been asking me about options. I will put together something because I've been really testing out the way I'm teaching options, or I'm planning to teach options with people who know nothing about options. As long as they can understand, hopefully it means it's easier for you guys to understand as well. All right, so right now it's 48 cents. Assuming I'm just gonna let this expire. The option will be open for a total of 10 days, and then it's about a 4% monthly yield because we are opening for 2 weeks, right? So right now we don't have a cost basis. So again, like I said, if I were to buy 100 shares, even at 210, the cost basis would be $207, which I will be perfectly fine owning Amazon at $207. So I mean, we will see how. So that's Amazon. When it comes to SoFi, right now, let me see how much is the contract price. I believe the contract is around 22 cents. So let me update this. Date updated 9th of March, 26. Okay, sorry, I need to zoom this in. I keep forgetting. So with SoFi, now we have 700 shares, $18.24. Okay. And we have sold a put on 3rd of March, expiring 13th of March, same time as the Amazon one. Strike $17.51 right now. This is 22 cents. So if I were to close it today at 22 cents, oh, sorry, this is the fee. Where's my closing price? If I close it today at 22 cents, I would have only kept around $290, which would still be a 5.1% yield. But honestly, there's no point for me closing it. I want to build out the SoFi position in this portfolio, right? So I'm just going to keep the closing price for now at zero because I'm planning to just let it expire. Either I buy the shares at $17 or I basically, put on this trade again for the next week. So right now, you can see over here, the moment we close this, the average cost basis will be around $17.50, which is even lower than where we are today. So SoFi has since recovered to $18.23. Yeah, so I think it will definitely take me some time to put together the series on options because it can't just be done in one video. And I think, right, although there's a lot of videos on options right now, a lot of it has a lot of my issue with the options video is basically it's telling you, like, they'll tell you, oh, a call option gives you the right, not the obligation to, buy and sell and things like that. Basically, this is just giving you a definition. But for me, that wasn't how I learned options. Of course, when I started doing options, I was reading books, I was, watching videos that told me the same things, and I didn't understand options that way. And so I'm trying to teach it in a way that actually helped me understand eventually. Yeah. And hopefully I'm leveraging a little bit of what I've learned as a teacher to make things a little bit more relatable for you guys. So I need to test it out first to make sure I don't make a fool of myself over here. Yeah, and then I will talk about it. So I'm, asking some of my friends and families to be guinea pigs for me. And yeah. Yeah, so when it comes to selling covered calls, I personally don't recommend anyone that is new to this to sell covered calls below your cost basis. Okay? Because you can get your shares called away before the expiry date if you're not careful. Yep. And the thing that you would want to do, if you ask me, is to go and pay $4,000 for an options cost, honestly. Yep. I've seen all the advertisements. Darren, you're from Singapore? I'm sure you have seen the same kind of advertisements as me. Yeah. Yeah. I don't think anybody needs to pay money for knowledge. It's free. It's just that, yeah, I don't think, yeah, I will be putting out a very long, detailed options things for you guys, and then we'll refine it as we go along. Okay, so basically this is SoFi, and then with Grab, now I have 1,500 shares. I believe my cost basis is $4.24. All right, so you can see I actually do have an overview, but because I was using this for another portfolio, the overview is still very messy. Next, I will be fixing this over the next couple of days. But if we zoom in to Grab, okay, I sort of closed it. How much did I close it for? I have to go and double check. Oh, did I ever sell a put on Grab? Oh, no, I don't think so. Oh, I was just putting this here for. Oh yeah, I'm just putting this here because the formula is in here. So that's all. So Grab is very simple. 1,500 shares, $4.24. I personally don't think I will be buying any more Grab shares. I've fully built out a position. It's around 5 to 6% of my overall portfolio. Happy with that kind of allocation. Like I said, for me, this is just an emerging markets play without having to look at, the Vietnamese market, Thai market, and stuff like that. Best way to do, yes, but in the end, one of the problems with this is, yeah, you must be prepared to pay school fees. I lost around $60,000 to $80,000 USD, by the way, learning options and how to invest and all that by myself. But it really is the best way, because I think a large part of investing in options and all that is your own emotions. Yeah. Okay, so moving on from this, Nvidia, no change again. The Nvidia position, basically I sold one cash account puts $4.45 at $170 strike. What is Nvidia trading at today? Nvidia is wow, the markets has recovered quite well. Nvidia, where is Nvidia today? Oh my goodness, where's my Nvidia? Oh, semis. Nvidia today is trading at $179. Okay, I think they closed at 173, right? So they really bounced off the 200-day moving average. Wow. Okay. So I mean, it's been pretty much range bound for a good part of 6 to 8 months right now. I do believe that at the end of the this cycle of volatility that we're seeing in the macro environment, Nvidia should easily be a $250 stock. Like I said, last year I've been focusing so much on AMD because last year I chose AMD over Nvidia, which thankfully AMD did do better than Nvidia last year. I think right now it's not that I don't think AMD can continue to do better than Nvidia. It's just that I rather move my money into the number one chip maker, and I don't believe that we are in an AI bubble. I think there's going to be some moderation in spending, but talking to people, reading papers about, trying to understand a little bit more about AI inference, I think we do need more compute than people realize. So I think the only thing that I'm uncertain right now is who will win in this AI space. But I know no matter who wins, they will be using NVIDIA and AMD's chips. If you were reading someone's Grab deep dive or Grab's article, what metrics would you want to see it in? Okay, I'll show you mine because right now I'm going to show you my Grab. Uh, oh, okay. I have to be careful not to point this down. Okay, over here, I can't see my own. Sorry, it's because I can't see my own screen because I have a second screen up here. This is my SoFi deep dive. Where's my Grab? All right. Okay, so I think Grab's advantage is very similar to Amazon's advantage, which is they really do have the first mover advantage. So if you ask me what I would like to look at, I actually like to look at two metrics when it comes to Grab. The first one, you please ignore the projections in 2026. Okay, they are not updated. I've just updated the recent numbers based on their earnings. So don't look at this and think that this is my projection. I will talk about projections later on. So when it comes to see you fish, I'll be back on Wednesday. I'll see you on Wednesday. But yeah, I'm not too sure. I have a meeting tomorrow, and then I'm also collecting some Pokemon cards. So that's why I'm out late. But if I'm back, I might just hop on the stream a little while to cover what happened with CPI. But yes, depending on what time I have to collect the Pokemon card, I'll see what time I'm back. Anyway, okay, so jumping in, I just want to talk a little bit about Grab based on their recent earnings and what to expect going forward. So one of the key metrics that I look at for Grab that tells me the health of their business is monthly transacting users. Now, one of the interesting thing to understand about monthly transacting users is that you compare it with their annual users, you can see that there's a greater increase in monthly transacting users than their annual users. Now, I don't really track the annual users over here because this is a quarterly metric that I'm or quarterly table that I'm using. But basically, if you take a look at their annual numbers, the monthly transacting users is increasing faster than the annual users, which means that they are converting more and more people into frequent users of their apps. And so this is one of the strategies that they have been employing in 2025, making it more affordable for people. Now, what that has led to is that you will take a look later on that the revenue has slowed down a little bit because they have been focusing on affordability. But you got to understand, it's like Netflix business, right? Netflix US business brings in the highest revenue compared to everywhere else in the world. And so similarly, with Grab, there are certain parts of Southeast Asia, like in Singapore. Singapore brings in the highest revenue per person, per user for Grab. However, Singapore is such a small country. We have so little people over here that Grab has to expand into the other areas of Southeast Asia. Now, unfortunately, in a lot of the other parts of Southeast Asia, people are not as well off as they are in Singapore. And so, because of that, when they reach out to some of these users, they have to adjust the pricing to match the lifestyle or the standard of living of people in those areas. When they do that, what happens is that revenue takes a hit, which is why this quarter revenue did not actually cross the 20% year-over-year growth mark. And I believe they did slightly miss their revenue estimates. However, in the long run, you can see that as long as they're having this member base on board, especially if they actually do go through with the GoTo merger, then you can see that they have over a 80% market share in Southeast Asia. And then as the Southeast Asian economy grows, as the middle class in Southeast Asia grows, they will continue to benefit. So with this monthly transacting users, what you can see also is the on-demand GMV, the delivery and rides. This has gone up slightly, 20% year over year, and the GMV per user is around $120. Okay, so this is something that I like to track to see how much, how frequent and how much each user is actually interacting with the app. And what you're seeing over here is that although they are increasing the number of users, the amount of money generated or spent per user on the app has been more or less stagnant for the last 2 quarters. Again, like I said, this is due to their focus on affordability. They just want to acquire market shares in terms of the user base and then expand later on and cross-sell later on. Wow, you're leaving us. Okay, so this is on-demand GMV. I'm just counting the delivery and rides because I count the financial services platform separately. So it depends on how you count it. I believe if you count everything, that's 131. No, technically I have a meeting, but after that meeting, I have to collect a Pokemon card. So yeah, maybe I'll show you guys the card tomorrow. If I hop on for a little bit. But I will have nothing prepared. So we will just be talking whatever happens in the market. Okay, so their loan portfolio doubled, which is very, very impressive. All right, I will be with the NVIDIA discussion later on. Give me a minute. Let me just finish this before I lose my train of thoughts again. Loan book doubled. And I think they are expecting their financial services platform to be profitable in the second half of 2026. That is going to drive up profitability. So right now, you can see that actually their margins are only around 6%. I expect there to be a slightly bigger margin expansion in 2026, especially in Q3 and Q4, as they ramp up their profitability in the financial services sector. So we have just seen with SoFi's business that if you take a look at SoFi's contribution margin for their loans, that's usually around 50%. So if they do even a 30 to 40% contribution margins for their loan portfolio, then we can really see the financial services add significantly to their profit margins. Now, another thing that you need to take note of if you are looking at Grab is I pay very close attention to partner incentive and consumer incentives. And I think this is one of the biggest moats for Grab that people don't really talk about. Because when you take a look at the incentives over here, in this last quarter, partner incentives make up around 45% of overall incentive. Consumer incentives around 55%. So this metric has been more or less in this range. And right now, you can see that year over year, total incentives grew by 24%. But what is impressive over here is that the incentives given out to both consumers and partners is only around 10% of their overall GMV, which means that they are not, relying on incentives to gain customers. They are growing organically, which is why they can continue to keep up this pace of this kind of rate in terms of their gross merchandise volume. So one of the things I want you to take note of over here, if I scroll down to this metric over here, is this green bars that you're seeing is the increase in their gross merchandise value. But this purple line that is going through the middle, you can see that while while their gross merchandise value is increasing, they have been keeping their percentage as a percent. They have been keeping their incentive, as a percentage of GMV consistent at around 10% since 2023. But because their GMV is growing, this 10% number becomes even more every single quarter. And so to me, this is a moat that Grab has, that it makes it very hard for any new competitor to come into the space. Because imagine you are a new competitor that comes into the space. Right now, just to be competitive with Grab, you need to be distributing at least $630 million in terms of incentives to partners and consumers to make your platform attractive, which is a huge cash burn that is not being easily replicated by any other company. So it's the same thing with Amazon. They have already built out their logistic network. They are able to deliver things within a certain period of time. Because of that, it becomes hard. If other people want to emulate that same kind of efficiency, they need to spend a level of cash in order to be able to build out their logistics infrastructure. Similarly, with Grab over here, because of how fast they're growing their GMV, and because their GMV is growing so fast, that 10%, their cost structure of using 10% of GMV to give out as incentives, this amount gets higher and higher as well. So every single year, it gets harder and harder for a new competitor to come in the space to compete with them. Do you invest in MSTR, or do you recommend it over BMNR? I actually make a video about this. I think the debt structure of MSTR is a little bit confusing for me. I spent the whole weekend looking through it, made a video about it. Yeah, let me see whether I can share it with you. You can take a look at what I said in that video. Basically, it's a complicated for me. I do understand how it works, why it works, but it's not something that I feel like I would sleep well at night owning. So that is why I decided to just stick with Bitmine, and I hold Bitcoin in my crypto wallets. That's about it. Oh, I can't even remember where. Is it this? Whoops. Okay, let me share the link with you. For those of you who are asking about my opinion between BMNR and, yeah, you can watch this video where I break down what I think about MSTR. I got nothing against MSTR. I think Bitcoin is important. I think Ethereum is equally important. I just think because of the debt structure of MSTR, for me, for my investing style, I'm already, so focused on, my option strategy and things like that. It's just one additional thing that I don't want to put on my plate right now. So it's not for me, but I know people who have the majority of their portfolio there, and they sleep perfectly well at night. So I think really to each their own. Oh, my X and my Twitter. Okay. Give me a second. My X is over here. Yep. For those of you asking for my X account, uh, okay. After this, I will jump back in to talk a little bit to end off the Grab discussion around the valuations. This is my X account. It's just my full name. It's Elijah Cheng. That's all. Right. Let me zoom this in for those of you who are interested. And then Instagram, also the same handle. Basically, I do the breakdowns of the companies there first at a very high level, and then I do the more deep dive on YouTube or through videos. So this is the X account. You can follow this. I do the breakdowns here, basically writing it out. And then if you are interested with Instagram, basically it's also the same handle. Okay, and you can see I just posted the portfolio update today, and some of the reviews over here. So basically, this is just the very high level overview of what we will be covering throughout the week and things like that. But if you want a little bit more of a deep dive, then that's when you have to come to the streams, you have to come to the channel to watch the videos. What do I think? Oil up or down? You know what? In another life, I might be able to answer you because I used to study chemical engineering. I would say that, I mean, I noticed my petrol price getting more expensive. I don't know whether we get to $150. I know the energy minister of Qatar said that $150 is a real possibility, and if he is saying that, I think the markets are being prepared for that. However, Trump did say that, you know what, things may not. We will try and end this fast. They're going to, yeah, I think there is talk right now that they might take over some island in Iran that basically produces 90% of the oil. So if the US does that, stability resumes again. For the article I'm writing, oh sure, feel free to use to use my material, no problem. You can go and take a look at some of my old grab. You can take a look at some of my old grab content as well. If you follow Amit's Substack has a pretty good article on that as well. Yeah. But feel free, you can just pause at any point in time and take a look at some of the numbers that I've been using. So right now, I just want to jump back on to the grab thesis and basically end it out. Okay, so with Grab, I think one of the interesting things about Grab is that I think a lot of people, we are already very used to, names like SoFi growing from $6 all the way up to $30, like a 5x in a matter of a year, and things like that. I mean, it's not a year. If you're like me, you've been holding it for 2 to 3 years prior to that, then it's different. But with Grab, this is a lot more of a slow grower. Now, what I've done is that I've actually used when it comes to Grab's valuation, I've actually used the numbers that the company have given to us. So in 2025, these are their numbers in terms of their monthly transacting users. And then GMV per monthly transacting users, everything is the same as before. And then you get the total revenues over here. Now, you can see that in Q2 and Q3, they were growing pretty fast. And then in Q4 2025, the growth rates slowed down a little bit. And like I said, this has to do with their focus on affordability. And what you can see, they are reflecting this in the user growth, right? So user growth, they added 2.8 million new monthly transacting users in the fourth quarter. Despite doing that, their revenue came in slightly below estimates. But like I said, you have to understand the long-term thesis for Grab. You're not investing in Grab because next month, at the end of the year, they're going to become a $10 stock. They will not. Okay. I'm going to say they are not going to become $10 at the end of the year. It's very unlikely. If they do that, I don't know. I will do some sort of forfeit, or I'll give away something online. But I really doubt that they will become $10 at the end of the year. Even if we get a very bullish market, I really, really doubt so, because they'll be so overvalued at that point in time. I would feel, but I'm not really sure. So let's take a look at the numbers. Okay, so moving on from this revenue, adjusted EBITDA, this is the numbers that they are operating at, and net income over here. Now, towards the second half of 2026, I'm expecting them to expand their margins a little bit. So that's why I use 8% in the first half of 2026 and 10% in the second half of 2026. So what we are doing is that we are going to use Anthony Tan. Oh my goodness, I like to invest in Anthony's stocks. Anthony Tan's projections of 20% revenue growth in 26, 27, all the way to 28, right? So this is 20% revenue growth. This is the total revenue that we'll be putting up. I'm expecting EBITDA margins to expand slightly to around 20%, and net income 8 and 10% net income. Okay. So with that, market cap, based on today's price, is around $15.8 billion. Debt, their most updated number, short and long-term debt, is around $2 billion. Cash and equivalents is around $6.8 billion, which means they have an enterprise value of around $11 billion. Now, if you take a look over here, this is the annual projections, because earlier on we were taking a look at the quarterly projections. 60% of your portfolio in Anthony's, yeah. I mean, I don't think mine is 60%, but yes, quite a hefty portion of my portfolio is being taken care of by Anthony, right? Or Anthony's in this case. So what I'm doing over here is that if you take a look at 2026 numbers, we are expecting around $4 billion in adjusted net revenue, net income of $360 million. This is where I said that they actually increased their share outstanding quite significantly from 4.2 billion to 4.4 billion. Now, despite them doing a $500 million share buybacks, that mitigated some of the effects of the dilution. Of course, they had the convertible note deal, which similar to what SoFi has done previously. When you issue a convertible note, what happens is that you have to count the shares, although they haven't exactly been issued yet. And by the time those shares are issued, certain share price targets have already been hit. So to me, not too much of a worry, but this is something that is going to affect their EPS in the short term. As long as they drive up profitability significantly in 2026, not too big of an issue. So, with that being said, if you take a look at their margins in 2026, we're expecting it to increase from around 6.8% to at least 9%, which means $360 in net income, bringing in a total of 8 cents of EPS. Now, their adjusted EBITDA is around $740 million. Now, their guidance is around $720 million, but we are expecting them, because of their usual habits of beating and raising, to have adjusted EBITDA come in at $740 million, which represents around an 18.3% adjusted EBITDA margins. Now, the reason why I'm doing this is because if you use the EV to EBITDA metrics for Grab, and the reason why I like to do this is because they do have a significant portion of cash on their balance sheet relative to their market cap. So this is a more accurate way for us to consider their valuation. So on an EV to EBITDA basis, I believe I was using 40 all along. Now, if you take a look right now, for Grab, for C Limited, and I think Lyft or Uber, one of them, everybody tends to be trading around 25 times EV to EBITDA. But I think that has to do with the macro environment that we find ourselves in right now, rather than any potential long-term valuation in the next year or so. Which means to say, I believe as long as the market recovers, as long as we get certainty, especially after the midterms, we go back to the previous EV to EBITDA multiple of around 40 times, then at the end of 2026, with around 16 cents of adjusted EBITDA per share, that gets us to a price target of $6.56. Now, if you use a PEG ratio, you just assume a 1 times PEG ratio, their EPS growth rate is around 57%. Now, I know it's 3 cents. Technically, from 5 cents to 8 cents is 60% growth rate, but I think because there's like two or three decimal places of the EPS. That's how you get 57%. So let's say 57% EPS growth from 25 to 26. 1 times PEG ratio means that their P ratio should be around 57 times by the end of the year. Apply that to their EPS of 8 cents, that gets you to $4.61. So if you take an aggregate of these two prices, Grab should be trading at around $5.58 at the end of the year, which is why I say, for people thinking that this is something that you can buy and then become $10 at the end of this year, I think it's a little bit far-fetched. I think $10 in a couple of years' times, perhaps, but $10 at the end of this year, to me, it's really out of the realm of what I would think to be possible. Now, if you want to use an EV to EBITDA of a slightly more conservative value, you can take a 30 times EV to EBITDA, just slightly higher than where C Limited is trading at today. And C Limited, to me, has been oversold after their recent earnings. But okay, let's say, even though they have been oversold, you use 30 times EV to EBITDA. I believe they're trading at 27 times. Even at a 30 times EV to EBITDA on aggregate, that still brings the total price target to $4.76. Now, today, Grab is trading at $3.84. Oh, I realize I really need to remember to zoom this in. I really need to remember to zoom this in. Sorry, for those of you who cannot see earlier on, I'm just going to repeat very quickly over here. 2026, earlier on, I was using 40 times EV to EBITDA because that's where we were trading at previously. Adjusted EBITDA, 16 cents. That brings price target to $6.56. PEG ratio, 1 times, 57% growth. P ratio, 57 times. That's how you get $4.61. So what I was saying is that if you want to be a lot more conservative, you use the EV to EBITDA at where C Limited is trading right now after their sell-off. I believe they're around 27. So let's just use 30 times EV to EBITDA. You get a price target of $4.76. Now, even at today, they are around $3.90. Let's just call it that. You take this minus $3.90. Oops. And then you just divide this. It's around a 22% gain from where you are today to the end of the year, right? So it depends on your cost basis what that return might look like for you. But if you are buying today, it's around a 22% return. So for me, it's going to be less than that, right? Because my return is only going to be like 54 cents. Because yeah, 52 cents divided by. So for me, my return is around 12% this year holding Grab. But like I said, the reason why I'm holding Grab is not because I think they are an extremely uh, high growth company in 2026 or even 2027. But I think the long tail macro thesis of Southeast Asia increasing their GDP per capita will definitely reflect in Grab's revenue, because if you're talking about market share and the highest touch point, I think Grab currently has that. They did just do share buybacks and yes, the Stash acquisition as well, right? I'm quite surprised that they actually bought Stash, because that's a US company, so I'm not too sure how they're going to integrate it in Southeast Asia. Yes, so I think a lot of that has affected the diluted shares outstanding, and because they just turned profitable, that's why some of the numbers might look a little bit ugly. But if they continue to ramp up their profitability, things can get a lot better in 2026. Because right now we are assuming that their margins are only at around 9%. But if they actually bring in a higher net income margin than that, then we could see an even better 2026. So let's say, end of the year, they came in at 17% net income margin. I really doubt that they will do this kind of net income margin throughout the year. So even if I do 10, 12, 12, even then, you can see immediately that this bumps up the price target to around $7 on average, right? Because you can see based on the P ratio, you will be getting a 91% year over year growth at a 91 times PE. So even if you assume a zero point 0.7 times PE or 0.8 times PE, you get a decent returns by the end of the year. But like I said, all of this is contingent on how much they can expand their margins. And I think we have to look for that in the third and fourth quarter of 2026 as their financial services segment turns profitable. Yes, I believe they only bought 51% of Stash, correct? Right. And so with that, I've come to the end of the live stream. On Wednesday, I'll be talking a little bit more about some of the other investments in the portfolio. I will also be covering the CPI numbers if I can't come online tomorrow. Otherwise, I'll try to come online tomorrow for a short while. And yeah, if you have any questions, companies that you'd like me to cover, because like I said, I am looking to buy some more companies. I think one of the companies I'm really, really extremely interested in is actually Circle. But because of how well and how fast SoFi have scaled their stablecoins, I'm wondering whether or not that's going to be a duplicate position in my portfolio. Therefore, the next acquisition or the next position in the portfolio I'm looking at is actually Zeta Global as well as Iran. So either one of these two. Hi Andre, thanks for the support. I'm glad to be of help over here. And if you guys have any questions, do feel free to leave them in the comments. Otherwise, I will see you in the next one. Yeah. Yes, Zeta Global. It's one of those companies. Oh, yeah, Zeta Global, really one of those companies that initially, like I was saying, I saw it on X. I felt it was like a hype stock. I didn't really want to take a look at it. But since I was creating this portfolio, I thought, why not? And as I took a look at the numbers started to convince me slowly. And then that's when I started to take a deeper dive into why they could survive when companies like the Trade Desk didn't survive. And then that's what got me interested, understanding how they collect their data and things like that. Yeah, and then after that, I realized I don't know how I missed it, but after that I realized somebody pitched Tanner and Tavis and all that, the stock, I believe, on their channel. I haven't watched that whole video yet, but I saw someone came on to their channel to pitch it. I don't know how I actually missed it uh, when they first posted it, but I think I was busy. But I saw when I was trying to search on YouTube for people who talk about it, someone went on their channel to pitch them. So I have saved that in my playlist and I'll be watching that video as well. Yep. And so with that, really, we have come to the end of the video. And if there's any questions, feel free to leave them in the comments. And if you like this kind of thing, if you want more, or you want me to cover a little bit more certain companies and things like that, feel free to leave them down in the comments below. And I will see you guys on Wednesday. Hopefully, CPI comes in good. We are seeing so that we can continue to see the market rebounds. Yeah, feel free to send me the link. Feel free to send me the link to the Substack. All right. I've got to go. I have an early day tomorrow. It is 12:30 a.m. for us in Singapore. Enjoy the rest of your day. Well, yeah, going for a run and then I'm going to bed. Bye, guys.